Take a look at shares of Starbucks today, all-time high. Now the top pick at Atlantic Equities. The firm reiterating its overweight rating. They say Starbucks is well positioned for the improving consumer economy, which Josh Brown has been telling you for, I don't know, as long as I can remember. Right, Josh?
Yeah, well, I bought it during the panic about a year ago, and I've been pounding my fist on the table ever since. If anyone thought that Americans were going to stop drinking coffee because there was a pandemic, they kind of got things backwards. The question on Starbucks was always, how affected are their locations by a prolonged reopening? And the answer is very. But I heard Stephanie make this point earlier in the show about some, a headwind becoming a tailwind. That's what you're going to see happen here as people run out. And Starbucks is one of these companies that is also doing everything right in China, in addition to all the transformation they've been doing here in the U.S., including closing stores or even shrinking them. So this is a company where life gave them lemons. They made lemonade. The lemonade happens to cost $4.99, but if you're long, you're very happy about that. And again, I'm up massively in this. I have no intention of getting out. I would trail it if I'm a trader. I would trail it with the 200-day, which is about 92 right now. So if like you say, all right, I have a lot of gains, I don't want to give them all up, that's been a pretty reliable place where you made a good sale once the stock is broken below it historically. So look at that 200-day as where you would want to manage risk.
So, Steph, I'll go to you on that, right? You, like Josh, bought it during the quote-unquote panic, right? You bought it last March, but you sold it in the summer. You made a lot of money. Josh is going to keep going. He's going to keep drinking the coffee or the Kool-Aid, however you want to look at it.
Kool-Aid.
You think you think it's too expensive now, and I see what's it 37 times forward?
And that to me is expensive, right? And so I was buying the stock when it fell
40%
from its highs back in.
Hold on, Steph. Yeah. Make your point. Then I wanted Josh's opinion on what you have to say anyway. So go ahead, Steph.
Right. These are, I wouldn't say these are exactly trough earnings, but you're definitely on the trough side, right? So I completely respect that. But I bought the stock when it was down 40% back in March, April, and May. I kind of averaged in, and I made a lot of money, and it went up very far, very fast. So instead, I added to Wynn, and I added to Marriott, and I recently added to Vail Resorts, and now Best Buy is now my next reopen name. So I have plenty of reopen. I have plenty of China. I mean, 70% of Wynn's revenues are Macau, and I don't know if you saw the numbers, but March Macau GGR, gross gaming revenues, were up 58% in March, year over year, against very easy comparisons, but I like that kind of story, right? So I'm not saying that Starbucks is a bad story. I'm not saying it's a bad stock. It is expensive. I'm not sure how much operating leverage you have versus the other names that I own at this point.
All right. Wynn, by the way, was upgraded today at Argus, and the price target was raised there to $160. I know you own Wynn calls as well, Doc, and I'll give you a shot at that in a second. But, Josh, just on what Steph said about Starbucks, right, it's a really good, interesting difference maybe of opinion in the way that you all view a winning stock. And maybe our viewers can learn something from that. So what's your rebuttal, if you want to call it that, to what Steph had to say?
I don't know if it's so much of a rebuttal. We just have different strategies. I wait for a stock to give me a reason to sell it, and just because it went up is not a sufficient reason. I'm not as focused on valuation as she is. I'm way more focused on trend. This is one of the top 50 charts in the entire Russell 3000. I promise you. You can go scan the entire market. You won't find a very many uptrends as pristine as this one. So I almost feel like wait for them to give you a reason to not be in it, but that doesn't have to be everybody's strategy. And on earnings, I think they could earn $5 in 2022 or 2023. And I think the market will take the stock to 150 before they're able to do that. Keep in mind they can raise the dividend. Keep in mind they've committed to keeping the buybacks going and shrinking the float. So I think it's reasonable given how well they're operating. Again, there have been chances to buy it cheaper. I concede. And Stephanie and I both did that. The difference is I'm willing to hold it despite the fact that it's gone up in valuation because I think it's actually gone up in innovation and momentum.
Got you.